Hello, hello? Can you hear me? Hi, all. Hi. If you are sitting in these bleachers, if you could maybe scoot in just a little bit towards the wall. I understand this venue is a little ways from some of the other DSW events, just so that folks can sprinkle in as they arrive. Appreciate it. And we're going to kick it off in just a minute. Maybe while we're waiting and before we kick it off, just to understand a little bit about who's in the room. Do you have a question for me? Oh. I'd love to ask a few questions, so please don't be shy about raising your hand. Who here is a professional investor? All right. Hi, Natty. Hi, Claire. Who here is an investor, but you don't identify as a professional investor? Love it. Who is a future investor? Love it. Amazing. Who's a founder? We got some of those as well. All right, wonderful. So I hope y'all were paying attention. We want to make sure today is really impactful and informative. First of all, thank you so much for coming. I want to give a specific shout out to Natty, who's taking a picture right now, who was both, I think, really supportive and allowed us to kind of fit in with this last minute session. We took a look at what was happening in terms of the investor speaker sessions, and this topic was not being talked about. And so we pitched it last minute, and guess what? We're here, and we want to have some really authentic and open dialogue and conversation. So what I'm going to ask of you all today, if you're up here as a panelist, please share all the things. Okay, I know it can be uncomfortable. Let's have some real dialogue. If you are in the audience and if we say something and if it is confusing, if you want a definition, if you want us to repeat something, raise your hand. Let us know. This is meant to be informative, to share really good information, to make things actionable so that we walk out of here, you've learned something and hopefully you can take this with you. But yeah, we just want to make sure it's interactive. We will leave time for Q&A. So get your questions ready and we'll have time at the end. I believe 10, maybe 15 minutes, we'll see. But again, if we say something and you are confused, I use a term around investing or somebody else does, this is an environment where we want you to learn. So please stop us, ask the questions. All right, so to get us started, I'm gonna be your moderator today. I'm Natalie Levy, the founder and managing partner at She's Independent Investments. Thanks so much for joining us for this topic. We're gonna hear brief intros, 30 to 45 seconds, maybe a minute from each of our panelists. And yes, we have a lot of them because they're all fantastic. And I'm gonna give prompts throughout so that we can really dive into this topic and hear from them and again, hopefully make some real impact together. So to kick it off, I just wanted to share some of the stats, some of the data. Across North America, ethnic and racial minorities represent only 20% of managing director level investing professionals today. Women make up 45% of the total venture capital workforce, but only sit in the key role of an investment partner 5 to 16% of the time. We know that women and diverse investors are going to allocate more likely to women and diverse founders. We're not going to get equity if we don't have more representation and diversity among our investing leadership ranks. So, really excited about this topic. Thanks for everyone who's here. I also wanted to, quickly say that in terms of backgrounds, we're not necessarily going to hear from everyone based on the question, but if you really want to hear from someone on a specific question, again, I encourage you, raise your hand, ask the question. We want to make sure we're getting everything answered. So, let's hear a brief intro from each of you. Grace, I'm going to start with you.
Sure. Hi, everyone. My name is Grace Oliva, and I'm a partner at the Colorado Impact Fund. We're a venture capital firm based in Denver, and we invest in companies that contribute to positive community outcomes here in Colorado.
Hi, everybody. I'm Sally Hatcher. I'm managing partner of Buff Gold Ventures, and our first fund invests in deep tech, primarily coming out of the University of Colorado, and anybody who's a CU alum.
Hello, everyone. Kevin Allen, four-time founder, 2 exits. I've worked in venture capital and private equity. I am also the co-founder and executive director of Access Mode, which is an organization, a nonprofit dedicated towards supporting BIPOC founders.
Hey everyone, I'm Suma, a second-year MBA student at CU Boulder. I'm also an investment associate at a student-led venture fund called Deming Center Venture Fund at CU. And with the second year of my MBA, I'm also taking up the directorship role for diversity and impact. I'm also an investment observer with She's Independent.
Hi, everyone. My name is Rio. I'm a principal and venture capital investor at Antler. I'm also the head of our Boulder residency, so we run founder residencies twice a year across 3 locations in the US and 25 in the world.
Hi, everyone. I'm Keziah Wanstolen. I'm the CEO and founder of Van and Chief of Staff, and also an angel investor. I'm happy to be here.
Great. So this panel is comprised of institutional investors, angel investors, future investors, founders, accelerators, you name it, right? So hopefully we can get some things answered today. Quickly, I'll mention She's Independent Investments, which is the organization I'd started, is all about opening and creating access and education around folks and women that want to get into investing and deploy capital, and also working to get more women and diverse folks funding. So I know these slides up here are a little tough to see, but if you have any questions out of today, you can email me directly, Natalie@shesindependent.com. You can go to shesindependent.com, our website, and we, of course, can make introductions to panelists, I guess, if you are unable to connect on LinkedIn or otherwise, happy to do so. So my next question, just to open this up a little bit more, is what's coming up for you today? And I'm going to open this up by sharing something a little interesting and a little bit out there. But I learned this week I'm neurodivergent. So it's kind of a fun fact and something that is both interesting and informative, but just in the spirit of acceptance and diversity and recognizing diversity can come in all shapes and flavors. I wanted to share that. And neurodivergence, I'm still learning what it is, but by definition, it's basically if your brain works atypically. So it could be autism, it could be PTSD, it could be anxiety, but I just wanted to share that. So that's what's coming up for me today.
I'm really happy, really happy and glad that you got to have this event here, because I think it's a really important topic, especially with some of the new news around the Supreme Court decision with affirmative action. I think it's important for all of us to have these open and transparent conversations about a problem that we're all trying to solve together. So thank you for putting this together.
Thanks, Grace.
What's coming up for me is that I've had a very diverse career. I've been a consultant and a lawyer and a 2-time founder in multiple other startups, one way or the other. And then I've trained scientists to become founders. And I realized that at the end of all that, these people still need funding. And there's just not enough women who are helping to raise that money and then get it into the hands of startups. So that became my passion project, and that's why I'm here.
Thanks, Sally.
Yeah, I guess for me, what's next is something similar. I've dedicated this part of my career towards breaking down barriers, towards making capital accessible for people where it's not usually accessible. As someone who's founded a lot of companies over a period of time, I've been told I'm too black to be a CEO of a bioinformatics company. I've been told I don't belong in the room. I've been told all those sorts of things. And these subjective sort of evaluations of my talent and my teams are not profitable, not good for business. And so I want to start to bring capital to the marketplace that is going to be good for business, take advantage of the diversity premium, which goes beyond what we normally think of it. It includes things like neurodivergence and other things where you're bringing different perspectives of thought to the table. And to me, that's where the premium lies.
I love it. And while we're handing the mic to Suma, I'll say it's not just feel good and not just about impact. It is good business to invest in diverse founders. It is good business. So I will say that again. Suma.
Yes, for me, as an emerging investor, and I'm not from here, for me, it's really about sharing my journey. And also be inspired by my panelists here, and hopefully be able to inspire and become a source of resource or support to anyone, like any other future investors.
What's coming up for us, at least at Antler, so we're gearing up for 3 residencies across the US, Austin, New York, and Boulder. So that's call it 50 plus founders per residency. That happens October 10th. It is the reason why we love this job. It's the reason why I'm doing what I'm doing. But what ends up happening, what that looks like is we bring in a bunch of different founders from a bunch of different states, backgrounds, ethnicities, you name it, industry sector, religion, whatever it is. And so we're super excited about working with founders at probably the earliest stage. We try to think of ourselves as like supplementing the friends and family round. That's how early we kind of go. And I'm pretty excited for the next 3 weeks. We're actively recruiting folks to kind of bring them in, and really excited to kind of host them in Boulder and for 2 months. So that's what's coming up for me.
So I entered into angel investing, maybe a little bit of background. I spent most of my career at Accenture, which is like a management consulting firm, for 13 years. I left and started Vannon in 2020. But at the time, what we do at Vannon Chief of Staff is we bring the chief of staff role into startups and nonprofits. And I realized quickly that being a chief of staff at a Fortune 100 was not the same as being a chief of staff at an early stage startup. So one of the ways I thought to learn more about startups and how they grow and how their financing is was starting to do some angel investing and learn it that way. So I started in that capacity, and at the time, She's Independent did not exist. And I remember Googling just like, what is angel investing and how can I do it? And there was no information out there. So for me right now, like even sitting on this panel, you having built what you've built, I just think it's awesome that we're talking about it. And as a woman who started doing this 3 or 4 years ago and had really no guide to do it, it's just great to see. So,
well, thank you. I swear I didn't ask her earlier to see that.
It's not planned.
So, first question, let's talk about what you're doing if you come from the investment background. So really, I guess, Sally, Rio, and Grace on this one. Share what you and your firm do today to drive inclusion among your leadership ranks. And feel free to share what is working and also what isn't or has not worked.
Sure, I can start. I think one of the things that I'm most proud of at CIF is our internship program that we've put together. And we target specifically both high school disadvantaged students and also in college. And this is near and dear to my heart just because when, I got a full ride to a liberal arts college and had really good grades, had economics as my major, but had a really hard time finding internship opportunities in this, in finance, because my father was not, the lead of the private equity firm, which is how a lot of these kids tend to get some of these internships. And so I really, and a couple of my colleagues at CIF, decided to create this program to allow these kids to really build out their resume and to build out skills that would help them in finance in the future if that's something that they wanted to pursue. And we've had, I think so far, around 6 or 7 who've sort of gone through the internship program. And one of them is at Ball Aerospace today. One of them is working at JP Morgan. So it's something that we think is really helping to skill up that next generation of talent. And I think it's something that if all firms do this, then it's a way to really create a pipeline of diverse talent for this industry.
It's being intentional, and I just have to weigh in quickly. I started my career on Wall Street, and about 50% of us in my sales and trading class were women. But by the time I left 5 years later, the number was 5%. So I think it's amazing. What are we doing to bring them in? And then what are we doing to develop, mentor, support, and sponsor that talent?
So when we think about like our value proposition initially, the hypothesis that we start with is there just aren't enough founders in the world today. Not that there's a cap to that limit, but that the on-ramps to becoming a founder haven't kind of been there historically, and so that's where we're serving that gap. But the real kind of thesis that goes a little bit further than that is the venture ecosystem, the startup ecosystem, it's a bit of a cycle, right? We've kind of heard this on this panel, is founders become investors, investors become founders, founders become advisors, founders become angel investors, right? They sort of start to span what the ecosystem is once they figure out, hey, look, I've done this myself, I want to help kind of contribute to the ecosystem. So what we end up focusing on is trying to nurture, what I would basically describe as like people that are either they haven't been a part of the startup ecosystem yet, and we're kind of giving them that opportunity to be there, or people that have kind of gone around that cycle of that ecosystem, and then what that's ended up scaling out to is having 13 regional funds that all kind of think differently about startups across the world, right? So there's a Nordics fund, there's a US fund, there's a Singapore fund, all of which have super talented investors that come from diverse backgrounds. They feed into Antler as an ecosystem where then you have a really interesting melting pot of ideas, and it's reflective in our portfolio, right? I think we have 80 plus nationalities represented in our portfolio. And so it's awesome to start to see that cycle kind of perpetuate itself. And that's kind of how we think about it, is building this kind of global, sometimes unruly network of investors that kind of exist across the globe and across these funds.
And I can definitely second the love investing in founders where they ultimately become investors if they are successful, or just recognizing the importance of that. So that's huge.
So we also have intern programs, which I love. I really like working with the students, and we've had excellent success with that. But you've nailed that, so I'll keep on moving. The other thing that we really do is we're in early when the teams are coming together, like the founding teams. And there is a lot of influence you can have at the very early stage. And so our first 5 investments were all diverse teams. And a lot of that, comes together with a university, but I will say that I have a group right now that I'm working with that are 5 older white men, and I love their idea, but I've given the feedback that if you all think in the same way about the same problem, even if you're sitting in different seats, it doesn't help you catch your mistakes, and it doesn't really accelerate you. So we really try to push to just have more people at the table. You just get better answers.
Great. And maybe, Kevin, if you wanted to add on this one at all, just given what you do and the representation of the talent that you have. And by the way, I sat in the Access Fund demo day recently, and it was fantastic, but I wanted more representation in that investor room, right? So feel free to speak to it.
Yeah, I think one of the things that Access Mode does is we work with BIPOC founders, and the thing that I think the industry takes for granted is the language, the existence of venture capital, how it works. All of that is taken for granted for a lot of founders and a lot of investors. And so I think a lot of founders get unfairly dinged because they don't know the language. That doesn't mean they're not talented operators. Doesn't mean they can't grow their businesses 100x. It just means they don't know the language because maybe they weren't exposed to it. I know when I went to school, similar to Grace, I had never heard the term investment banker or consultant, never met anybody who was an investor, didn't know this world existed, but I went to school with a bunch of investment bankers' kids and private equity folks' kids. And so I had to catch up just to get behind to where they are because they grew up around their kitchen table talking about this stuff. So I think it's important that we do things as a community to expose people at an earlier age, particularly who are diverse, that this exists, that they can do this, that they can use their talents to be great operators or great investors.
Great. So I know this question ended up going a little bit to the founder side, and I have a few more questions. But again, if you are wondering a little bit more about opportunity and those gaps for the investing leadership, since that was technically the question, we can get to that a little bit later on in Q&A. Let's talk again about the investor's perspective and mapping a path to investing. So I know a few of our panelists are either newer or not yet investors. So maybe to start, Suma, let's hear about you. In terms of mapping that path and thinking about becoming an investor, what do you feel is working or maybe not yet working?
So for me, in this whole journey, I think I've been through both formal and informal ways of educating myself about investing. For me, it really started off with the Venture Deals course designed by Techstars and Kaufman Fellows, which is free, accessible to all. That is accessible on so many levels. It's free, it's self-paced, and you can kind of team up with anyone in the world. So that was like my intro to investing, which was amazing. And then in terms of formal, of course, I'm getting my MBA, and my focus is venture capital, so I'm taking courses. And again, being involved with the Deming Center Venture Fund, which is amazing, an applied learning experience. So like I said, we are a student-led venture fund. So we actually invest in early-stage startups and CU Boulder communities or CU founders. And with She's Independent, now I'm again paving this journey of like angel investing, being involved with She's Independent as an observer, not really an investor. So for me, I think it's been a lot about educating myself and immersing myself in these applied learning experiences until I actually get like a formal job or I actually become an angel investor in the future.
And real quick, I'm recognizing that we didn't necessarily define this, but an angel investor is an individual who may not be a professional investor, but is allocating capital on their behalf. It's their funds. So this is, of course, something that my question was about for Keziah and Suma. But then some of the others that you've heard from are professional investors, meaning they're allocating capital on behalf of individuals, families, folks that are giving them money. So their role professionally is to allocate capital, where angels, it's I'm allocating on behalf of myself. Maybe it's mission aligned, maybe it's something that is impactful, but just to break down that definition a little bit. So Keziah, I know, has been doing some angel investing. Do you want to share a little bit about what's worked on your journey, what maybe has been missing? I know if you can speak a little bit openly, some of maybe the angel groups out there maybe it didn't work as well for you. So feel free to be open about that.
So I started, like I said, in 2020. The first one I did was it was actually a friend. He was a CEO based in the UK. And that was my first kind of entree point into angel investing. I think for me, what I've now learned, and I haven't had any formal training in this. I mean, like I said, I watched some YouTube videos. I think I took a switch class that I know you're working with them. But what I have had in the last 3 to 4 years now is worked with over 63 founders as part of what we do at Vanna and Chief of Staff. And a lot of those CEO and founders are raising capital. And so we've actually had this opportunity to sit with these founders and watch them go through this process. So for me, the hands-on training of just watching them kind of go through the process on the other side has been really interesting. And yeah, I think that the two things I've learned is that you have to be ready to lose it, right? Angel investing it's almost like gambling. I don't know the exact stats, you probably do, but you have to be ready to just lose all of it. So that was interesting for me to observe. And then also, and I haven't lost all of it just yet, so that's good. The other thing is that I now kind of ask, like, what's expected as someone who's investing? What is expected of me? Because if I write smaller checks and the CEO is calling me every Monday, I want to know that. And I don't like to set that expectation now. And I've learned that over the last few years. It's just understanding the expectation from the founder of when you write these angel checks, like, what are they expecting from you?
Thanks so much.
Yeah.
All right, so let's move on to discuss what we're missing when we don't invest or we don't have, let's say, diverse investment leadership teams and representation in terms of capital deployment. The things that I often think about are the product influence. What are we missing, if we don't have enough women deploying capital? What's happening in terms of, representation in the boardroom, because a lot of times the investors are getting those board seats. So I'd like to hear from each of you on this topic, which is, again, what we're missing if we don't have diverse investor leadership, and it's also okay if you want to skip it. So whoever wants to speak, I welcome it.
So you miss a lot without diversity represented from an investment standpoint. I think the first thing you miss is problem solving, right? You need diverse perspectives to get the best solutions for a problem. I think you miss alpha, right? You miss return because you're not thinking through all of your go-to-market strategies correctly. You're not taking into account enough life experience, enough perspective. And I also think you miss opportunities to look forward and help the teams grow themselves. You learn from each other in a startup, you learn from each other as investors. And so when you have you're in an echo chamber, you're not learning anything. You're just repeating the same things that you all know because you all share the same perspective and have seen the same opportunities. When you have diversity in terms of how you think, in terms of your experience, in terms of your background, in terms of your culture, you're getting the best of all worlds to the table and you're making the best decisions with the biggest data sets. And so there's a lot that can be missed when investors don't have what they need from a diversity perspective at the table.
I love that, and we see it all the time with our angel group. We have folks, predominantly women, but folks from all different backgrounds, and I am constantly impressed with how creative the thought process is. I'm gonna give a shout out to Susan, one of our investment members over there in the crowd. But basically, it's not groupthink. We're getting creative, we're asking tough questions, we're asking all different types of questions, and it's not like everybody was Silicon Valley, banking, and this specific finance background. So it's actually, I not only believe it, but I see it in action, and it really impresses me in terms of the diligence we're running and the types of deals that we're selecting to invest in.
I have just one. Go ahead, Sally, you go.
No, I Jump on, Natalie, I think that that's such a great point of making sure that you're asking all the questions. You know, if you just invest based on a straight template of checking the boxes and then comparing maybe across 10 companies, I mean, you'll get some kind of comparison, but trust me, it's always the things you didn't ask that bite you. And so it's having more ideas and more people at the table to just push at it from different directions. You begin to get to the heart of what could the weaknesses be in the plan and what can you mediate now. Before you invest is when you have the most leverage. So you need to be thinking ahead about what to ask for up front. And if you don't see it, then you can't ask for it.
Great points.
I just had this incident this past week. So one of my investments, I have a board seat. We were sitting on the board. I'm the only woman on the board. Also, I'm the only one that has children. So I have 3 kids under 9. And just diversity of perspective is interesting. Like, that's very important. But also just tactically, we were talking about someone's maternity leave. And these 4 men who don't have kids, they're great, by the way. But we started talking about maternity leave. And just they were saying things. I was like, clearly you guys have never had children, because there is no way that you want to do that 4 weeks after you come back from having a baby. And so even then I had that moment, I stepped back after that board meeting going, I mean, listen, if I had no value in that entire board meeting, whatever it was, but that piece of showing up and being there to provide that perspective to all the women in the company, it's 100 people in the company, and no one had that voice in the room, just even about something as simple and tactical as maternity leave. That, to me, is what continues to drive me to be passionate about showing up and elevating women into these positions. So
Phenomenal.
that was
point.
like on Monday.
No, love it. Thank you for sharing. I've also been stepping up my board journey, and yes, I totally second and echo the really important to have all different types of perspectives and people in those rooms. And by the way, they're very powerful rooms, and if those are going to those that are investing, we need diversity among our investing ranks so that we can also be in those rooms. Anything you want to add?
No, I mean, I think everything that everybody said was really well said. The one thing I'll add is that it's amazing how often what Keziah described is happening today. It happens every day. I do find in the boards that I'm on, I do tend to be the only female of color. Sometimes the only female, and sometimes the only person of color. So it's interesting, and I do feel that I am listened to. I think that there is, at least for the boards where I serve, there is an openness for a difference in thought, and but then, as you mentioned, the trick is how do we get the board representation to be diverse as well? And I think really the only way is to get more diversity for investment professionals, right? Because those are the ones that will take on those board seats, and really the root cause is kind of the pipeline of talent that we spoke to earlier, where when we've gone out to hire for our firm, I would say we get maybe 5 to 10% of the candidates are diverse in some way. So we do try to go out and seek them out, but there is this, I think one of the big problems is that the talent is not there, and we haven't done a good enough job to really develop that talent.
Really great points. So being intentional to really seek out and find the talent, even if we're getting less numbers and applications. By the way, when I worked on the private equity side, I can't tell you how many people I interviewed, and I did end up hiring 2 women. I swear I wasn't trying, but they were the best candidates. And so I think at the end of the day, making sure you're getting a good representation of candidates, not just letting them come to you, but be proactive. Proactively plug into folks like Access Mode, PSA, and not just folks like YC, where we know that there's not great representation, among some of the accelerators out there. And Antler, really excited to plug in with you all as well. But being intentional with where you're hiring, where you're looking for deal flow, all of those things. Okay, so a bit of a broader question. Let's talk about what's not happening today in this investment ecosystem and what needs to change. And this is, I realize broad, but include tangible actions for future investors or current ones. For me, just to kind of kick it off, I want to see more individuals saying, I can step in and be impactful with my capital. Whether that's how you're spending as a consumer, the businesses you are supporting, if that's mapping a path to angel. When our dollars come together, maybe we have less billionaires, but guess what? We have a huge, huge amount of money when we pool it. And so if we recognize that there's not enough money going to women's health or these initiatives that we really care about, what are we doing about it? And that's why I'm so excited to not only run, but also deploy capital as an angel, run an angel group, excuse me. So yeah, just feel free to dive in and again, share with some of these gaps, what are tangible actions that people can take? And again, you can be as vocal and as authentic as you'd like, sharing some of the gaps that we haven't yet touched on.
So I'll say something. The most common phrase that you'll hear these days, and I'm guilty of it because I sit in that role, is that it's never been easier to be a founder. It's never been easier to start a startup, right? The other thing that is also true that is far less talked about is it's also never been easier to be an investor or be involved in the investing game, given recent legislation, recent platforms, recent ways that you can actually kind of activate your own network. The thing that is often very discounted or undervalued is like unique channels of how to do that. So when people are interested in getting into investing or angel investing or whatever type of asset class you're interested in, oftentimes they think about the dollars and the cents and sort of the markups and stuff like that. They think about the Excel models and what the business model is. They don't really think about like what contribution looks like to a founder that just started a company 8 months ago. Like how do you actually contribute to that person if you had nothing in your wallet, right? If you weren't actually investing, how would you contribute to that person so that they build trust with you, right? And so when I think about like tangible next steps, if I were to talk to folks that often will kind of talk to me about, hey, how do I get involved in VC and what did you do and whatever. They're looking for like kind of this formula that is like a checklist, right? Very similar to like kind of the college checklist of you do the classes, you get the grades, whatever. I think the reality is if you contribute to early stage startups, you start to compound trust with early stage founders. And guess what? Early stage founders know other founders, right? So some of the most impactful angel investors I've talked to, they're less concerned about, they just want to contribute, right? They know that capital is a way to contribute, but then they just kind of nerd out and geek out on how they've actually helped companies. And it's a question I'll often ask them is like, what company were you most fired up about? How did you help them? What did you do? What did you not do, right? Where did you kind of step in? Do you feel like you're that first call, right? That's oftentimes a phrase that we'll use. Like, let me give you really specific stuff. Republic, WeFunder, those are ways you can actually invest in equity crowdfunding, which is a really recent piece of legislation where you can actually invest in startups. That's a way to say, look, I can actually put a smaller dollar amount into startups and say, hey, look, I've invested in this startup. I'm really super pumped about the space, and I can demonstrate that, right? And then beyond that is to say, like, can I become a startup advisor? Can I help you connect you to the right folks? Is my network strong enough in which these connections are going to be super valuable? I think people totally discount what the power of that email with the CC of a connection can do. And some of the most powerful angel investors, they didn't just happen to be in the room with the Ubers and the Airbnbs of the world. They worked their ass off to get in that room and build trust with the founders that otherwise there's 800 other opinions that founder is listening to. Right? And so they're looking for the 10 opinions that they're really going to trust. And it takes time, it takes energy, it takes a lot of effort, it takes honesty to kind of be in that room and say, like, I'm going to help you, and this is how I've actually demonstrated help in building your own track record. Like, I think it's never been easier to actually build that track record and really demonstrate the value add that you have for companies, whether it's a lemonade stand of your nephews or it's an early stage startup that's creating something in AI that's some crazy software, right? Like I think it's far easier to do than most people sort of think about initially because they think the dollar amount is the threshold that prevents them from doing something great with companies.
I loved all that, and I just want to mention something or bring something up that we talked about earlier, which is if you are showing up and you're adding value to these founders, to these companies, you may be able to land a board seat or an advisory role even before you're ready to write a check, and that can be really influential. It doesn't just have to be the capital. You don't have to today have all the money to be accredited or, and I know we're coming out with different legislation for how you can invest otherwise, but you can still get involved and you can still potentially nail that board seat. So just want to mention that. Anyone else want to jump in?
I'll jump in briefly. I mean, just talking about how to fill these gaps. I mean, part of it is really just your own education. So every single person in this room can be an investor. Absolutely. You've got this. So what you need to do is go educate yourself. So I personally think it's easier to start in the public market because you can put so little money in and you can track it and you can learn about it. But then you can go to these startups and you can invest. You can go to places like She's Independent, Women's Interest Network. There are places around where you can find a tribe and just learn what investing looks like and be a little bit fearless. Do know that this is money that is incredibly high risk, so you're pretty likely to lose it, and take that as part of your your educational well there. That just be aware that this is really high risk money. So the other side of that is for the founders who are in the room. I encourage you to look beyond your friends and family for your first round of money. So if you have not lost your friends and family's money before, it sucks. And you can't lose the family, but Thanksgiving's kind of hard, and you can really lose the friends. So I'd encourage you to also educate yourself. Do you actually need venture money? It's a very specific kind of money. Do you actually need angel money? Are there grants out there? There's a lot of grant money flowing in that you can use and leverage. So there's real opportunities to get out there and find a more diverse group of investors who can also then add this kind of value when they come in with their money.
Yeah, investing requires disposable income, which necessitates success on some level, right? Which necessitates being in a career that's going to make you successful to get you disposable income. That's easier said than done, I think, for some demographics than others, right? It's if you've got to take care of multiple generations, if you didn't grow up in an area where you weren't exposed to this sort of thing, it's more difficult to do those sorts of things, right? But there are other pathways. I think it's not just about investing in companies that hey, I believe in this corner shop. I think there's good cash flow here, and it's part of my community. I want to invest in that and support that. But I think founding companies is something that is underestimated from an investor standpoint. Being in that seat is very different than judging someone who's going to be in that seat, not understanding what the personal toll looks like, what the sacrifice looks like. And so for those who want to think about investing, if you have ideas, if you can be a founder, if you can start something, anything, and just go through that process, what you gain in terms of knowledge, in terms of awareness, in terms of appreciation and empathy for those that you might be investing in someday, invaluable. And there's no school that can replace that. There's no degree you can get to understand that. And so I think, disposable income aside, the founder's pathway as a precursor towards finding a successful career where you can come back and invest is a great way to get the knowledge that you need and understanding to eventually get there and deploy capital.
I think, and just to add to that, I think you can also develop real credibility with that group, right? If you've been there and you've done that, and I've been an operator before, and that has really helped me gain trust with the management teams, and it gives you, I think, the right profile where a founder would say, like, yes, I want you as part of my team, and I trust you.
Kevin brought up a really important point, and I want to, shed some light on it, which is folks of diverse backgrounds, the queer community, women, were not from a young age necessarily raised to say, invest that money and do something with it, right? We have money in savings accounts. I talked to a black woman the other day. She literally has it under her mattress. Like, that wasn't a joke. Understanding that people are raised in different households, and if you don't have that disposable income, and if you are not taught and told, hey, these are things that you can do, and you're not in that job where you are, by definition, an accredited investor with money to spare, there are different pathways. I loved that Kevin is talking about the founder pathway. I think, having a job that maybe it's a little soulless, but maybe that gives you some extra income, and then being able to apply it towards things that are more impactful, something else to think about. But I think, exploring, educating yourself and saying, what is that path? And I know a lot of people that said, well, I put in a little money towards that, crowdfunding because it felt good. Great, maybe that's your step in the door, and then you can write a really small check. But just finding out what is the path for you, and it's not gonna look the same for everyone, and that's okay.
Can I say one thing on that? I saw a stat that was 83 or 85% of women die alone, whether it's from divorce or they're losing their partner. So if you don't understand, specifically for women, right? If you don't understand what's going on, both on the day-to-day finances, but also on the investment side, you're going to be at a loss when at that point. That stat to me was shocking. I think it was talking about Lyons Bernstein or something. So for me, kind of watching women become more interested in it, because a lot of even the content that's out there on Instagram and it's all focused on like, how do you manage your 150K grocery budget? I don't give a shit about. I mean, I do. I care about that. That's important. But also, we need to go beyond that. We need to be able to manage money, and investing is one of those ways we can do that. And if we're not talking about it in this, it's just continuously not going to raise women up to be able to have those conversations.
Great. Anyone else want to jump in? Sure.
Yeah, I guess just from a university perspective, we often do not see a lot of interest. Like even if it's for more women to apply to become a part of Deming Center Venture Fund. Sometimes it's great, the turnout, but sometimes it's not. So I really think that what we are doing as students at CU is, my friend Tim here, he and Henry and Sarah, all of them are here. Okay, so they had this educational session which was open to all, which was just like very basic level of, okay, what is VC, for example? Because so many friends in my class in the MBA don't even consider investing, like whether it's angel investing or VC as a pathway. And I think just educating, like building that awareness, I think that can definitely get more people on board.
Great. Well, this was such a pleasure. We have time for Q&A, by the way. I know that, I see a hand being raised. We might have Jonathan, if you can run some of the mics around. Thank you so much for each of our panelists. Thank you all for bearing with as I somehow scheduled 6 panelists for this. I mean, does that make any sense? Probably not, but sometimes you have to rethink things. But it looks like we have a few questions up there.
So traditionally, if you go back 10, 15 years ago, angel investors, the epistemology of an angel investor was a person who first had experience in your realm of business, in your niche. So first, they gave their time. Second, they opened up their network. So they validated through their time, then they opened up to their network. Kind of third and dead last, well, right before you needed to move on to the next thing, maybe cut a check. But that was the epistemology of an angel investor. VC 10, 15 years ago, you want to send a rocket to Mars. Are we going to bring anything back? No, we're just going to shoot the rocket there. Are we going to send back photos? No. But we're going to be the first. And this sounds awesome. Here's $1 billion. Like it was wild and woolly money. We've progressively seen that money become almost institutional all across the board. With that, I'm seeing that that institutional money is not giving back into the time and effort as much. Now I know there's a lot of scheduled time, and I will get a ton of pushback from VCs and everybody saying I spend a lot of time with my investments. But with that, and to kind of with Kevin, what I'm seeing is less of that access. And less of the feedback on the giving back on the front end, getting involved with founders before we've gotten into an accelerator, before we've gotten into so like 1 million cups. I'm seeing no investors at like 1 million cups. I'm not seeing any angel investors Monday through Friday during the rest of the week. Which, Kevin, you brought up the point of education. Those founders, before they're founders, or as they're budding founders, or before they get to that angel or that VC level, we're missing the education part. We're left to YouTube and Googling for information. How are we seeing, and here's the question, how are we seeing at the VC and the angel level that engagement into the communities as people are budding, so that we're controlling, so we have some more input and some more real world experience into the budding founder system before we get to VC and angel? How are we educating early so that we have better deals upstream?
Yeah, I think first of all, this ecosystem, the Colorado ecosystem, is doing a better job than most at that. I know there's some private equity firms based in Boulder. I actually just got invited to one. I could not make it. Going into high schools and having conversations with high school students about what private equity is, how you could use it, how people deal with it. Those are the conversations we need to have, and everybody should have that mentality. We've got things like 1% pledge out there, other things where we're committing as a community of investors, of founders, to certain activities. This should be one of them. We should make sure as a community that every single one of us, as a professional investor, as a professional group of accelerators, whatever it is, invest our time to get to underserved populations, to get to underexposed populations, and do that. I think it would be a great idea to catalyze something like that and make sure that everybody is pledged to it the same way we pledge to other things. But there's just got to be a commitment. It's got to be formal. We've got to hold each other to the fire.
If I can call out Henry Wright in the audience. Henry. He's hiding. He's working on an initiative to go into schools and do a lot of education and support for folks earlier in their journeys of launching and starting businesses. So listen to this.
You're absolutely right. So one of the things that we're doing in the CU ecosystem, starting out in Boulder, a pilot this year is taking the New Venture Challenge into a few selected high schools. But what we want to do is take that whole model from high school, undergrad, grad, and alumni, and have services along the way, an endowment and a fund, or two funds. So we've been talking to Sally about how do we structure funds so that we can catch students early, we can catch founders early, provide them grants and other means to start their businesses, both rural, along the Front Range, and all the way to the western slope. Now, what you don't know, Natalie's being pretty coy here. Just yesterday, a gentleman named Stan Hickory asked Natalie, myself, and probably 10 other people to start to be on a board to actually build out a strategic plan over 5 years to actually execute on what we want to do.
Thanks, Henry. Oh, next.
Following up on kind of those same discussions around community, we know that the system that's kept us out on the margins was built by having co-investors. An investor could go to 3, 4 other investors. They know who their deal was a fit for and say, hey, this is your deal. And if you ever worked on Wall Street or were around Wall Street, you know that that's how deals got done. So my question to you as investors is, how do we now create those types of networks so that our founders, we're not just bringing our money to the table, but we're bringing a pool of money to the table that can actually help them succeed through multiple rounds?
I can definitely jump in a little bit as an angel and running an angel group. We are big on recognizing our syndication or group investment check may only be 100,000, maybe 150,000. Maybe it gets bigger as we get bigger, but basically plugging into and knowing other institutional investors, meaning other professional investors and funds, also plugging into other groups. For example, other women's groups are great and align really well, where maybe together we're coming in and it's $500,000 or $250,000. But recognizing our check alone is only going to do so much, and you're absolutely right. I think being able to refer and make introductions into others with capital is huge. But at the end of the day, I guess positive or negative, it does feel like a bit of a small ecosystem, but we know a lot of folks, and we've now partnered with and are more formally partnering with a lot of folks that are very aligned with us in terms of all wanting to deploy in really impactful ways. And by the way, we care about risk reward, but we also care about women and diverse founders, but really trying to align so that we can raise bigger amounts for these founders. So I think it's just being active, it's making the introductions, but it's recognizing, our check's only going to do so much. So it's plugging into the rest of the ecosystem and helping founders with that capital journey. If others want to weigh in. Maybe not.
No, I can. I do think that actually building syndications is part of the name of the game. So it really is, looking for other folks who have the same interests that you have, and trying to build those groups. So for instance, I mean, we know that there's not enough funding in Colorado for some of the deep tech stuff that I do. So I spend a lot of time on the coasts trying to figure out who will want to come in the next round, because my money, however big or small it is not enough. And it's got to be that you're building the network. And I think that that's actually a really important point about the strength of any company is also the network of support that they're able to build. So bringing on investors who are active and engaged and willing to bring their network of additional supporters, whatever that might be. There's so many different kinds of resources that companies need, but it does take everybody building that network and then bringing it into the company to really make the company successful.
And I might quickly just add, I know a lot of times diverse founders and women are going the crowdfunding route. It's great, but I'm also seeing that they're not raising as much as they'd like. And so I think crowdfunding, great, but then also getting institutional or, investor money at play so that maybe the pockets are deeper, they can help you if something happens, being able to step in, whether it's board or advisory, but being able to basically make capital introductions, because if it's just the crowdfunding route, I've seen that kind of be exhausted, and then it's, how are we going to raise our 1 million or whatever we need. If we could move the mic around, thanks.
I'm glad you guys did this last minute pitch, because super important topic. They're representing JP Morgan's startup banking group in tech, and I wanted to ask kind of the dreaded two-part question. So the first part is thinking about the LPs being at the table and those individuals being underrepresented. Do you think that's a driver that will help kind of change or fix this diversity issue that you're here talking about? And if so, what's kind of the tipping point at which someone should think about changing from being an angel to an LP into a fund?
Love that question, and let me just say it for some of the people that maybe didn't hear it. The question is, no worries, I think it's the mic. LPs, limited partners, meaning you're an investor in a fund, but you are not, making decisions about capital deployments of the fund. Sally, for example, runs a fund, so you can be an investor in Sally's fund, and you could be an LP. She is the GP, the general partner.
And I have 31 investors.
There we go. So what does the LP diversity, investor base look like? And by diversifying that, does that kind of solve the problem? And or how does an individual think about being an angel versus being an LP, and what does that journey look like? So I'm going to open it up to the floor. I just wanted to recap, and then I'm also happy to weigh in.
I think having diverse LPs is kind of the first step, right? Ultimately, the LPs trust the investment professionals at the funds to make the decisions around deploying the capital and allocating capital. So I think ultimately, while that's the first step, I think you still need the diversity at the investment professional level, because without that, I think you won't have the amount of diversity that you would have otherwise. But I think it is the first step for sure, and I think investment professionals and the GPs always, are constantly thinking about what do my LPs care about, what mandates do they have, and so it will, I think, help drive the investment strategy and the impact and diversity strategy. But I think ultimately it needs to really, you need the investment layer to also be diverse.
Yeah, there are people like Ariel Capital and others who are diverse LPs, right, and who are making those investments. But I think, to Grace's point, understanding the diversity premium as an LP is what you need to do. If you believe that your EBITDA is better when you have diverse boards, when you're mitigating risk with diverse operating teams, then you're going to invest in GPs who also believe in that. And you'll create funds that are looking for that diversity premium. So I think from an LP perspective, the way you move the needle is really making sure that they're educated on what diversity means to their investments. And then as fiduciaries of that money, they now say, I am actively seeking diversity and a diversity mindset because I know it's better for my bottom line. And so to me, getting that message to LPs and having them understand what the value diversity brings is the first step. And that's how we get traction. Okay, so the diversity premium is basically what we were talking about, right? So diversity leads to a lot of great outcomes for founders, for investors, et cetera. There is documentation, there is data that says EBITDA is better for a company that has diverse operating team or has diverse board. There is documentation, there is data that says that you mitigate more risk when you have diversity of thought solutioning for a problem. And so the diversity premium is sort of a general term for saying that when we have different thoughts, different people, different backgrounds, different cultures at the table, we do better from a bottom line perspective, from a dollars and cents perspective. And when LPs understand that they're going to invest accordingly, and that's where I think we really get things going.
Love all that. I want to add quickly, I've also seen and heard where LPs, so diverse LPs, can be appointed on boards. It's not just the GPs, it's not just the professionals of the firm, so that's one thing I want to say. Another thing is, it's easier to be an angel investor than an LP, just given the size of checks and all that, especially if you're investing alongside a group. And I want to say the difference of somebody allocating capital because they decided to make an investment in a business is very different than I'm going to give Sally Hatcher capital. I still love the LP approach, or Grace. It's when you make the decision, and I've seen it again and again with folks like Susan that have stepped up into the investing role. That is a transformational mindset, the way they show up, the way that they're gaining new skills and confidence and headspace or mindset, it is amazing. And so I'm a huge proponent of, I love the LP journey, I love that you can be an investment professional, but if you can write the check, I think it's transformational in terms of how that individual shows up. And yes, I think having representation among those that are deploying the capital is really important, not just in the LP base.
I think I'm curious. So the transition, when you talk about going from point A to point B, especially when you talk like cultural systemic change, the transition is often the hardest part, right? Ideally, we have the goal of the outcome, but sometimes the initial 0 to 1 is really, really difficult to build momentum. And so the question I have is, how do we mitigate people who, we're naturally gregarious, we love to be in groups with fellow people who we, feel comfortable with. How do we mitigate gatekeeping when we talk about giving access to all of these underrepresented groups? Case in point being, there was an event that I attended recently. It was a webinar, and it was not directly marketed as women only. The panel was all women. There were 4 very successful women operators, and I looked at that and I said, oh my goodness, there's so much that I would love to learn from these operators, and awesome, they're women. So I signed up, and I get on there, and I am one male out of 56 attendees, the other 55 being female. And like I said, it wasn't directly marketed as this is a women-only event. But I know sometimes that's the tendency, is especially for us as underrepresented minorities, when we get something, we hold on so tightly. But there's also the aspect of how do we also just change the mindset of the people who are already at the table, not just get new people at the table. That does help, and that's absolutely a priority, but also we want to make sure that we're supporting other people in changing into being more inclusive.
I would love to jump in. We are a women first angel group, and we are so big on allyship. We have cis white men that join us if they're aligned with us. I think recognizing that it's bigger than just gender, and recognizing the importance of diversity, and what we're talking about up here, which is influence, and ultimately what's the ROI, and it's something that's bigger than just women for us. I think great point, and I think every environment needs its own, to define its own culture, its own what's the place and who is this for. I can tell you from being in some angel groups that we're not very good with inclusiveness. As a woman, even with a financial background, I could see how uncomfortable it was for women to ask up and speak up, ask questions, especially those that were newer. And so I think sometimes there is a time and a place, especially let's just say we're talking about women's bodies or menstruation or things that may be really uncomfortable for some people to talk about. Sometimes we may want to say, hey, we want this conversation to be those that identify as women. But to your point, well taken, and I think it's really important for us to define what is inclusiveness, what is important about the way that we show up, and not being a checkbox of, oh, well, this is woke and we're going to do this thing, but what do we really care about? What is our culture? What is our mission? And aligning with that. And so for us, I can say wholeheartedly, we want men that are aligned in the room. Maybe not every room, but for the most part, we want them to be a part of it. So I hope that's helpful for perspective.
Yeah, and just to chime in, what you're describing is basically that's nirvana, right? Where you get to this point where like what you look like or where you're coming from or whatever, that's an afterthought, right? What's more interesting is that you've got excellent operators or investors or founders in the room, and the afterthought comes way after that event, right? Where you're like, oh, actually, yeah, okay, well, that happened to actually be a room with predominantly women, right? And so when I think about that, like, it's hard to, I'm still kind of fumbling around to figure out like how you implement it. But the thing I often think about of like, who do we want to bring on to Antler, right, as an investor, or who do we want to bring on into founders? Generally, the common thread is, are they lateral thinkers? Meaning, do they think across different disciplines at a level that is much, much higher than your sort of average operator, investor, founder, whatever? And so backgrounds or genders or whatever these other proxies can be, oftentimes they lend themselves to that they're better lateral thinkers. They come from different backgrounds. They have this kind of different sense of thinking. Not always, right? You can have a bunch of people that actually look very different and think exactly the same. And so I know that investing often has that issue, right? Where you kind of run into the situation where it's like, you know, we might look like, you know, like a bunch of different folks, but we actually all only invest in one thing. We only care about one thing, right? And so when I am often looking at founders or investors, like their depth and their breadth of their ability to laterally think across different types of subjects, different types of ideas, different types of thinking, that's what I'm ultimately looking for. And that's what we ultimately kind of cherish.
Yeah, I think it's an interesting question, just coming from, you know, an organization who supports mostly BIPOC founders. One of the reasons I love Colorado and why I believe that this state could be a destination for underserved investors, for underserved founders. I think Colorado is a special place because of the collaborative nature of the people in this ecosystem. That is it. I've lived coast to coast, lived in San Francisco, New York, Chicago. There's nothing like Colorado from an ecosystem perspective. At Access Mode, we're servicing BIPOC founders. Natty lends his time. I'm gonna ask a lot of you guys to lend your time, so that's coming. But this conversation happens and it's honest. It's not, I know everything. I'm willing to listen to another perspective. And when you listen to that perspective, you learn, you grow, and everybody grows from that. I think a lot of minority groups in particular have a habit of, you know, you're so beat down all the time from the world that you want to get in a group of people who look like you, come from the same cultures, you think like you, right? To the exclusion of all others. I don't think that startup building is a place where you want to do that all the time. There will be times when we're going to have a conversation that's going to be very frank that is only relevant to this particular group or this experience. But the conversation needs to happen more broadly, it needs to be inclusive. It's happening here, and that's the way we also change the needle. We have to invite each other in each other's rooms. We just do. And when we do that, everybody learns when you come with the right mentality.
One closing thought, change, right, is a great place to be for, you know, being able to grow. And I'd say, you know, being in uncomfortable conversations and rooms is sometimes the best opportunity. I'm not saying always put yourself in that, you know, position, especially if that's not something that you want to do, but recognizing that sometimes showing up, even if you weren't invited, and even if you're, you know, starting to speak up and realizing, wow, what I'm saying is something that is really out there, that is a lot of times, you know, what we need to do when we're, you know, going from 0 to 1. So maybe we'll close on that. I know we're out of time. Thank you so much. It was such a pleasure. Again, thank you to the panelists. And again, any questions, I'm happy to share my email, natalie@shesindependent.com. Y'all feel free if you want to, you know, share anything, shesindependent.com, you know, if you want to learn more about us. Can we get a quick picture of us as maybe panelists?